Welcome back to Candlestick Signals for today's market, where we'll dive deep into the candlestick signals that shaped the trading landscape on August 25th, 2025. Buckle up, because today's session was a roller coaster of mixed performances, sector rotations, and intriguing technical patterns that could make or break your trading strategy. From bullish Marubozu to bearish engulfing patterns, we've got it all covered. Let us jump right in and decode what the charts are telling us about the market's next big move. The U.S. stock market today presented a complex tapestry of sector performances, with defensive sectors taking the lead while technology and retail stocks faced headwinds. Healthcare, consumer staples, utilities, and energy sectors outperformed, showcasing their resilience in the face of market uncertainty. Meanwhile, technology and retail equities struggled to maintain momentum, testing the resolve of growth-oriented investors. As the closing bell rang, major indices flirted dangerously with short-term support levels, keeping traders on their toes. The increased volatility set the stage for a notable sector rotation. As investors sought refuge in traditionally defensive assets, looking at the weekly performance, market benchmarks displayed subdued returns, with the S&P 500 eking out a modest gain of 0.27%. However, it's worth noting that momentum strategies outperformed on a risk-adjusted basis, despite rising drawdowns across the board. Let's break down the candlestick structures that emerged during today's session, as they provide crucial insights into market sentiment and potential future movements. In the healthcare sector, we observed a striking bullish Marubozu pattern, particularly in stocks like HCA Healthcare and Cosmos Health. Its long green candle with little to no shadows signals strong buying pressure and potential upward momentum in the coming days. The energy sector also saw select stocks forming bullish Marubozu patterns, indicating possible strength in certain corners of the market, with bearish engulfing patterns appearing in industry giants like ExxonMobil and Chevron, suggesting some valuation strain and fading momentum. On the flip side, the technology sector painted a more bearish picture. Evening doji star formations and bearish engulfing patterns were prevalent among tech leaders such as Nvidia and Intel. These ominous signals confirm short-term reversal trends and heighten the risk of further downside in the near term, with evening doji stars and bearish engulfing patterns suggesting that the recent rally in retail stocks might be running out of steam. Notably, Target displayed particular weakness, while Walmart's price action was characterized by increased volatility, potentially setting the stage for significant intraday moves in the coming sessions. Interestingly, defensive assets across the board frequently displayed doji and spinning top signals. It appears that traders are holding their breath, awaiting key macro catalysts before making their next big moves. Now, let's delve into the technical interpretation of today's market action. The S&P 500's daily candles left long lower shadows, hinting at the possibility of imminent short-term bounces. However, the upside seems to be capped by the upper Bollinger Band, suggesting a potential range-bound scenario in the near term. However, it's worth noting that momentum continued to lag in Hebeta assets, indicating a possible shift in market leadership. For those keeping an eye on the Forex market, the Elliott wave structure on your USD supports a consolidation phase around the 1.1646 level, the potential for downward continuations in the coming sessions. Let's take a closer look at some sector and stock highlights that caught our attention today. Supported by strong earnings momentum from companies like HCA Healthcare and Cosmos Health, the sector saw a robust 4.2% increase, translating to a market capitalization change of $35 billion. The technology sector, despite its recent leadership, faced significant headwinds today. Evening star, bearish engulfing, and bearish kicker patterns were observed in market leaders such as Nvidia and Intel, signaling heightened risk and the potential for further profit-taking. The energy sector presented a mixed bag of signals. While some stocks displayed bullish patterns, the overall sector formed a bearish engulfing pattern, confirming valuation strain. ExxonMobil and Chevron in particular faced fading momentum. The sector saw a modest 0.5% increase, adding $3 billion to its market capitalization. Consumer staples and retail stocks showed mixed candlestick formations. Target's weakness was evident, while Walmart's volatility suggested the potential for significant intraday moves. The consumer staples sector managed a 1.2% gain, increasing its market cap by $8 billion. In the financial sector, kicker and engulfing patterns were prominent, indicating tactical profit-taking, especially among major banks. The sector experienced a 1.5% decline, reducing its market cap by $12 billion. With Meta platforms driving much of the technical sentiment, the sector saw a 0.8% increase, adding $6 billion to its market capitalization. Overall market sentiment remains bearish to neutral, with short-term risks prominently displayed across various technical indicators. Institutional flows are favoring defensive sectors and value plays, while the high volatility in tech is prompting significant reallocations. While mid and small caps are showing more reversal signals, its divergence could lead to interesting opportunities for astute traders in the coming days. As we look ahead, the market's next major catalysts include the highly anticipated Jackson Hole Symposium and upcoming retail earnings reports. These events could provide the spark needed to break the current consolidation phase and set the direction for the next significant market move. To summarize today's candlestick signals and their implications, key stocks to watch include HCA Healthcare and Cosmos Health. Technology stocks displayed evening star, bearish engulfing, and bearish kicker formations, suggesting a negative outlook. Keep an eye on Nvidia and Intel as barometers for the sector. Consumer staples saw Doji and Spinning top patterns, reflecting market volatility. Walmart and Target are likely to be in focus as earnings season progresses. The energy sector formed bearish engulfing patterns, hinting at weakness or neutrality. Financial stocks showed kicker and engulfing patterns, suggesting a neutral stance. Major banks will be key to watch in the coming sessions. The communications sector displayed engulfing and spinning top signals, indicating volatility. Meta platforms remains a significant driver of sentiment in this space. In conclusion, today's candlestick formations confirm sector-based divergences, with defensive industries demonstrating resilient bullish signals, while technology and retail stocks show multiple reversal and profit-taking patterns. Across market capitalizations, large caps are maintaining relative strength through defensive rotations, while mid and small cap stocks reflect higher volatility and trigger frequent reversal patterns. The technical analysis, candlestick structure, and overall market sentiment all point towards cautious positioning ahead of major macro events. Sector rotation is likely to drive performance as we head into September, with defensive plays potentially outperforming in the short term. As always, it's crucial to combine these technical signals with fundamental analysis and stay attuned to breaking news that could shift market dynamics. Keep a close eye on the upcoming economic data releases and central bank communications, as they could provide the catalyst for the next significant market move. Remember, in the world of trading, knowledge is power, but proper risk management is key. Use these candlestick signals as part of your broader analysis toolkit, and always trade within your risk tolerance. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.